Welcome back to Buy Now, Sell Now, a show where we get you answers for all your stock-related queries. And viewers, do note that you can connect live with us on the WhatsApp number that will be flashing on the top of your screen throughout the show, as well as you can also write to us on our social media pages of ET Now on X as well as Facebook platforms. And we'll try to take as many queries as possible. And today, on to answer the same and to help you better, we do have Kunal Bothra as well as Shahina Mukadam with us. So let's get started then. And a lot of queries have already started to trickle in, and the first query that I have is coming in from Sudhir from Bangalore. And Kunal, let me take it from you. He wants a suggestion on MCX. What's your take on this one? Is it advisable to enter the stock at current levels?
I think it's a fantastic chart. The stock has done exceptionally well. Now, I think at 6,700 levels, of course, it looks like that the stock is overbought, or maybe the risk reward to enter the stock may not be very strong at current levels. But then I think these are the kind of stocks which tend to give you steady returns on a long-term basis. So there are two things which is required if you're looking to buy MCX. One, of course, you need to have a longer term time horizon, which means you need to look out for at least another 2 years, 3 years, 5 years kind of a time horizon, and we can expect that the trends which have started off for the last 1 to 2 years for MCX, that will sustain and grow and build over the next 2 to 5 years. And the second, the most important part is you start small at current levels, because at any point of time, if the stock gets into maybe a 10%, 15% kind of a correction, those are the kind of opportunities where you need to buy. So you have to be a bit more patient from a long-term play, and I think keep that kind of a time horizon. Only then I would suggest a buy on MCX.
Alright, so that's a conditional buy coming in on MCX from Kunal. Shahina, I'm going to come to you with the next one, because we do have Sandeep who's writing to us from Hyderabad, and United Breweries are the counter that he's looking at, because he has 65 shares at a buy price of 2,052. What is your take on this one then?
Yeah, I think it has, given a good steady return over the last 1 odd year, and even from here, I believe it looks good. Most of the brewery stocks are likely to do better this year, so I would say it is a good stock to hold. But I would prefer buying it at dips. So maybe I could look to buy it closer to about 1,800, 1,850, given the volatile situation, and on valuation basis, it is slightly expensive. So I would wait for a slight correction and then add.
Right, you can add United Breweries, but do add this particular stock on dips. That's the advice coming in. But the next counter is from the metal pack, that is SAIL. And Kunal, let me have your take on this one. When V Venkatesh is holding more than 1,100 shares, his buy price is 135 rupees. What to do in this one? Should he go ahead and average this particular stock and add more? He can continue holding it for the next 3 to 6 months.
From 3 to 6 months, there could be a possibility that the stock might get into a recovery, at least from the sharp sell-off zones the stock has shown. But I think the bigger potential for SAIL could probably be unlocked from a long-term play, because the longer-term charts for SAIL are still very positive. The kind of breakout the stock had shown when it had crossed 105, 120 plus mark, that kind of a breakouts still sustained. The stock has not made a lower low for itself on the longer term charts, and that generally is an indication that the trend should be intact. Now, short term wise, yes, the stock in the last 2-3 months have gone through a very sharp correction from 170 to now 120 levels. So even if it's a short term trade, I think buying the stock at current levels with maybe a potential of 8% to 12% kind of an upside in that kind of a time span could be a decent trade.
Alright, so some upside when it comes to SAIL is what Kunal is looking at. China, I'm going to come to you with this one, because we do have Satya Vini writing to us from Visakhapatnam, and he's writing to us about Glenmark Pharma. 30 shares is what he's holding on to at a buy price of 1,790. What is your take when it comes to Glenmark Pharma then?
Glenmark Pharma has actually given you a good return over the last 1 year. There's a lot happening there in terms of new product launches. And I would say that it is a good buy at current levels, a good hold definitely if you're invested in it. They have got a good pipeline of products going forward. And the restructuring that actually had happened last year is now behind us. So they are starting to move into profitability.
All right, that's the take coming in on Glenmark Pharma. But the next query that I have is coming in from a viewer Okay, let me just scroll through. And Shahina, the next query that I have is coming from Subramaniam from Visakhapatnam, and he presently has have 30,000 shares of Geo Finance at a price of 271 rupees. What will be your view on this particular stock, Shahina?
In this space, it could turn out to be one of the largest and the most diversified financial company in the universe, in Indian universe, in that particular NBFC space. So to that extent, I think Geo Finance, while very expensive at current levels, makes a decent bet for the longer term. It's only if you're a long-term investor you can actually buy as of now. If you're holding, you can continue to hold, because I think in terms of growth, it is likely to be one of the highest growth in the NBFC space as of now.
Geo Financial Services is a good bet. That's the word coming in from Shahina as well. Kunal, I'm going to come to you with the next one. Sudha is writing to us from Mumbai itself, and she wants to know about Bajaj Finserv because she has 60 shares that she's holding at a buy price of 1,540. What is your take on this one? Exit or hold?
I think you can continue to hold on, especially after today's recovery for Bajaj Finance. It seems like that maybe this last 4 weeks of selling for Bajaj Finserv from 2000 to 1700 thereabouts, where the stock is stabilizing, I think that could be an opportunity where maybe the stock would have formed a near-term bottom. But I would believe that a major bottom or breakout could happen only once the stock confirms a breakout back again above the 2000 mark. Since you purchased at lower levels, you have that cushion of holding on to the stock and riding through this tough phase of volatility and then expecting the stock to get into a bounce. So short term wise, I would expect a bounce on the stock from current levels.
Alright, a bounce expected from Bajaj Finance as well as the take on Finserv. I beg your pardon, that's the take coming in on Bajaj Finserv. But the next query that I have is on Ambuja Cements. And Shahina, this query is from Rekha, who's holding 200 shares of Ambuja Cements, and her average cost is just 260 rupees. Good to go ahead and book out some profits out here or continue to hold on?
Well, I would not suggest you books out of profits, because we just had the acquisition that they have made. So I would actually, in fact, continue to hold, because in terms of size, it is actually now inching towards the 100 million capacity. And I would say that while it is expensive currently as of now, and maybe you could see some bit of consolidation in the cement space, I think after Ultratech, it is the best. So one can continue to hold for the medium to longer term. I'm quite positive in the long term for cement space. As of now, there is some weakness. I would hold through the weakness because the buy price is also very attractive.
Shahina, I'm going to come right back to you with this one because SK Saran is writing to us from Bangalore, and they want specifically your take coming in on Max Healthcare. How does it stack versus other listed hospital stocks? What is your take when it comes to this particular counter? Shahina?
Yeah, okay. Max Healthcare, yeah, in terms of valuation, it is more or less in line with the rest. To an extent, in the hospital space, I would prefer some of the other larger hospitals like Apollo Hospital, which in my view is equally valued as Max Healthcare, but in terms of growth and potential balance sheet quality, I would prefer Apollo Hospitals.
All right, that's the take on a couple of these hospital counters. But the next query that I have, Kunal, is from Swati. And she wants your advice on Zensar Tech. She has got 75 shares and her buy price is 800 rupees. What to do in this particular stock? Continue to hold on, because a while back she was in profits is what she's highlighting. But for now, it's a loss. So what should be the strategy?
See, I think it's a quality stock. The long-term charts are very attractive. The kind of volumes the stock has shown in the last, I think 3-4 years, I think just gives an indication that this is a long-term, upside potential stock, Zensar Tech. So I think that aspect I would suggest to hold on to the stock. Now, in terms of a strategy, I think that this current level of 650, 660 or thereabouts, where the stock made a bottom or a double retest of the bottom, that should be taken as an opportunity where you can look to average further. So that you can reduce your cost price and say bring it down to say somewhere closer to 720 or 680 kind of a mark. So I think if it's possible, then I think closer to 660 mark is where I would suggest you to average.
Alright, so the next query is coming in for you, Kunal. Geeta is writing to us from Dubai, wants to know about Zaggle. What is a good entry price that you have in mind for Zaggle? Now, of course, she's willing to hold from a medium to long-term perspective, but what do you have in mind when it comes to this one?
See, I think it's a very good chart because I've seen the stock getting to breakout zones on the longer term basis from levels of 350, 360 initially to now 400 plus, which is a very strong solid support for Zaggle. So I think broadly 400 seems to be a major support for the stock, but it's just that in the last 1 month the correction for the stock has been a lot more less as compared to many of these other mid cap, small cap names. So I think that aspect, maybe the stock may not retest the levels of 400 and sustain below those levels for quite some time. So buy on dips is what I would suggest. You can start at current levels of 416, 17 where it's trading right now, and then potentially, if in case there is an intraday correction towards 400 mark, look to average further there.
All right, that's the take coming in on Zaggle. But the next query that I have is once again for you, Kunal. This one is from Denny from Kerala and holding SBI from a price of 794 rupees, and he does have 5,000 shares of SBI. What's a short-term view on this particular stock?
See, I'm bullish on the stock because my expectation is we did a relative strength analysis on sectors, and apparently the PSU banking lot in the last 10-15 days. After that first round of major sell-off for the markets, from there on, PSU banking stocks have shown a lot of resilience, and especially the large cap names like SBI as well as Bank of Baroda. So I think in that aspect, I would suggest that there could be a speedy recovery in case if the market stabilizes like what we've seen today. Even if you have a couple of days of these flattish recovery sessions for the markets on an intraday basis, there could be a possibility that stocks like SBI could make a comeback. Even if you're a short-term investor or a trader, you could look out for targets in the range of 800 to 820 approximately for SBI.
Alright, so there you go. Those are the targets that you should be keeping in mind when it comes to SBI. Shahina, I'm going to come to you with the next one because Gautam is writing to us from Mumbai, a regular viewer of the show, and he wants to know about a host of these counters. Now, he's given us a list and he wants you to pick from this list. This is a list across counters, one that we just discussed: SBI, Indian Hotels, ITC, Bharti Airtel, as well as Tata Motors. So which are the ones, one or two counters is what he's looking at in terms of what your suggestion should be?
If I had to make a portfolio, these all stocks would be part of my long-term portfolio. So having said that, now it's very difficult to pick off them. Let us say for the shorter term, let's say 6 months. So if I was to look for a 6-month period, current buying, in fact, I would be ITC because I expect the demerger to happen in the near term. So I would prefer that. And for the hotel business, I mean, so then I will hold both hotels as well as the FMCG and other businesses in ITC. Of course, the ratio is, 1:10. So for every 10 shares, you get 1 share of hotel. Keep that in mind. And maybe Tata Motors, if I'm looking at a 6-month period. If I'm looking at a 3-year period, all of them.
Alright, so that's the portfolio making done right by Shahina. But the next query that I have is coming in on yet again two counters, exchange related. And Kunal, if you can help Yuvraj on your take on BSC as well as CDSL, wants to know that is this a good time to start accumulating any of these stocks for the long term?
See, I think BSC and CDSL both could be attractive, but again, because of the steep run up for both of these names, you have to wait out for those phases where these stocks correct by at least 15%, from the recent swing highs. I think BSC has already done that. If I'm not wrong, even CDSL, I think from the recent highs corrected by 10 to 15% kind of a margin. So you can start off at current levels, but then at every phases of these stocks going into a correction is where you can look to buy. The reason why I'm keeping it a very broad 15% is because of the high beta nature of these stocks. And we've seen historically that whenever the market gets into a phase of a correction, these high beta stocks are the ones which correct very sharply. So you can't keep a buffer of 5%, 7% to these names. Just because of that, I would suggest to buy on dips, especially with these 15% swing lows from 15% correction from their recent swing highs.
Alright, then time for a very quick breather on the show. When we come back, we'll continue taking all of your stock related queries, viewers, so don't go anywhere. Welcome back. Thank you so much for staying tuned into Buy Now, Sell Now. Let's continue taking all of your stock related queries. Kunal, I'm going to come to you with this one, and this one is a little bit of a googly because we do have Satyajit Pratap who's writing to us from Hyderabad. Now he wants to know, he has 150 shares of Titan and he wants to know if he should sell this and go for Trent instead. What is your take?
Well, I think that could be that's a very good googly, but that could be a good proposition, I think, at current levels, because there are two things which are happening. Titan is start to show signs of incremental weakness in the recent past. And Trent, on the other hand, especially after the addition of the stock into the Nifty 50 basket, we've seen the stock getting into a very strong kind of an uptrend. Yes, the stock has also gone through a correction from 8,300, 400 levels towards 77, 7,500 where it's trading right now. But then when we look at this on the longer term basis, the stock still looks attractive. You can look to make that switch at current levels, but I believe that maybe a partial switch at current levels could start off to be a good strategy, because in case if trend corrects furthermore and say comes back to that 7,000 mark or 6,900 levels, that could be a very good zone where you can look to add further.
All right, the next query that I have is coming in from Rebecca and Shahina. She wants your advice on AB Capital. She has already bought 70 shares in his buy, and her buy price is quite attractive at 110 rupees rather. What's your view on this one, and should she go ahead and buy more of this particular stock?
Yeah, actually, valuations are very attractive for AB Capital. It's just about 2 times price to book. So yeah, she can add, but given the volatile nature of the market, better to buy it at dips. She can add.
So can add when it comes to AB Capital. That's the take coming in from Shahina. Kunal, I'm going to come to you with this next one and a couple of counters around Shankar's radar. He's writing to us about ONGC as well as Hudco. He wants to know about ONGC. Now, he's not mentioned how many shares he's holding on to, but his buy price is 297 rupees when it comes to ONGC, and for Hudco it is 233 rupees. What is your take when it comes to both of these counters?
See, both are very good buys from long-term play. Yes, ONGC I think has also gone through a correction of 15-20% from 320 to 260-70 where it's trading right now. Same is the case with Hudco. The stock has fallen very sharply from 350 to 200. But then I think there comes a point where these stocks become very attractive from a longer term perspective. That doesn't mean that the fall would get arrested for these stocks, but then in terms of price points, they become classic entry points from a long term play. So the risk reward starts to look a lot more attractive for these stocks. My belief is that both of these names, Hudco as well as ONGC, they could be very attractive stocks at current levels, given the kind of sell-off these stocks have shown and the long-term uptrend these stocks have been going through over the last 2-3 years and more.
All right, that's the take coming in on Hudco. But I'm once again coming to you, Kunal, because Muskan Agrawal wants to know, is this a good time to enter stocks like PFC? Tata Motors, I guess you have already shared your take that you do find that stock attractive. And for PFC as well as Coal India, what will be your advice? Good to go ahead and buy some shares here?
Yeah, I would believe so. I think both of these names, PFC, if you can club REC also in this list, as well as Coal India, I think these names are looking very attractive. So there is a mean reversion which has completed for PFC, REC. These stocks have come back to their respective 200 moving average. The approach for these stocks in the last 1 week, 1 month of this correction has been a bit more staggered. These are high beta names, and when a high beta stock gets into a very staggered kind of a correction, it indicates that we are not seeing any major kind of a sell-off, and these stocks could revive a lot more stronger whenever the market gets into a recovery phase. So again, in terms of classic risk reward as well as a sectoral composition, I think both of these names, PFC as well as Coal India, could be good buys.
All right, Shahina, I'm going to come to you with this next one because Santosh is writing to us from Bangalore, wants to know about a couple of counters, IndusInd Bank as well as GMR Airport. What would you say about both of these counters then?
I believe IndusInd Bank, they are doing pretty well in terms of the growth, both in deposits as well as in advances. Also, in terms of valuation, at about 1.8 times price to book, it's pretty attractive. So, IndusInd Bank could be part of your portfolio. You could add on at maybe slight dips. And as far as GMR Airport goes, I think I would better avoid this stock, though it is doing much better now than a year back. They have got new initiatives that they are doing to improve the balance sheet quality, but I would avoid.
All right, that's a white coming in on GMR Airports, but yes, a thumbs up for IndusInd Bank. But the next query is coming in for Aarti Industries, and Kunal Rajesh from Mumbai wants to know what is the best price to average this particular stock and any target price that you can share if he continues to hold this for the next 1 year.
So, that 150 or 60 point correction which had happened for Aarti Industries in the month of August. So, from 750 levels, if I'm not wrong, the stock in a single week, I think had corrected towards 605, 610. So, that 140 point correction has already seen an extension further. So, from 610 approximately, the stock has corrected back towards 480 mark. which means that we are looking at a point where the stocks should be at a very good risk reward in terms of a contra buy. But the first confirmation which we typically look out for in stocks which go through such a kind of a sharp correction is the first instance where these stocks either form an RSI divergence, or on a second instance when they break past above their previous swing highs. In this case for Aarti Industries, the first swing high is closer to 540 mark for the stock. So there are two strategies which you can adopt. Say for example, in case if the stock corrects further, it comes back to that 460, 480 mark, that's a good zone where you can look to average or add Aarti Industries. But the stronger confirmation could be once the stock breaks past above the 550 levels.
Alright, so a couple of those strategies coming in from Kunal when it comes to Aarti Industries. Shahina, I'm going to come to you with this next one that is coming in from Jay Krishnan, writing to us about Hindustan Copper. Quite the elevated buy price if you look at it, because 352 is what his buy price is at. What is your take when it comes to this one then?
Yeah, actually his buy price is high and we are seeing a bit of correction from those levels. But in my view, metal prices and especially copper is likely to stabilize. So he can go and average it, but average it at lower levels, maybe close to about, at least 10 to 15% lower. Somewhere close to, say 260. 260 would be a good level, but he can average at lower levels.
All right, that's the advice on Hindustan Copper. But Kunal, Mekha from UAE wants your take on NHPC because she's holding shares at an average price of close to 87 rupees. Good time to average this particular stock?
Yeah, I think the RSI for the stock on the daily, weekly charts are extremely oversold. Now that indicates that the stock has gone through a very sharp kind of a sell-off. But I think these are the points where stocks which are good quality, which have strong fundamentals as such, I think they come back into a very strong value territory in terms of the technicals as well. So we try to look out for strong stocks when they come back into such kind of oversold nature in indicators. They become very good buy zones. I would believe that NHPC is reached those kind of levels. So from a longer term perspective, at current levels, I would suggest a buy.
Alright, Kunal, I'm going to come back to you, but before that, I'll take Shahina's take coming in on this particular counter, Manapuram Finance. Neha from Bangalore is writing to us, Shahina, and she wants to know what your take is when it comes to this particular counter.
Manapuram Finance, I would avoid as of now. I think the whole segment is going through some pain, NBFCs. I would go for a large bank, PSU bank like SBI, like even Kunal suggested earlier. For the maybe medium term, 6 months, 1 year, I would prefer to be in a bank, PSU bank like SBI.
Alright, Kunal, I'm going to come right back to you with a chart check on this one. Manapuram Finance, what do you have in mind?
See, of course, after this recent sell-off and the news flow for Manapuram Finance, the stock has fallen very sharply. But the first port of call is that wait out for the stock to break past above a series of resistances. In this case, 160 could be the first major resistance. Let the stock cross, confirm a breakout, sustain for itself above this 160 mark for the next couple of days. If that happens, I would believe that maybe the worst could be behind the stock price and we might see the stock getting into a very strong recovery. So buy on confirmation on the upside is a better strategy for Manapuram Finance.
Alright, that's the take on Manapuram Finance. But Kunal, the next query is a query on the index, and Venu, who is a senior citizen from Chennai, is quite interested in knowing the levels on the index level. After yesterday's fall, and the many mid-cap stocks have also broken below their key support levels, Nifty too has broken below its 50-100 DMA. What is the next strong support for Nifty 50 and till where it can reverse? Any take on this one?
So my belief is that after this 4 weeks of this is the fourth week of correction, and we've seen historically that whenever the market gets into a phase of correction, now I'm removing those periods of 2008, 2001, and the year 2000 as well as 2020, because these three are exceptional cases where the markets went into a very sharp correction. But generally, we've seen that a correction lasts for 4 to 5 weeks, and the fifth week is generally where stronger territories of going into a contra buy emerges. So we are already in the fourth week of correction. In case, assuming if next week the correction sustains, and if you see another, say 300 to 500 point dip on the index, then I would believe that we could be at a very classic point where the risk reward would be very attractive to go for a buy on the index. So in terms of levels, I would believe broadly 24,000 could be a good starting point. But I think the slower and the gradual the move towards 24,000 happens, the better the opportunity is from an index trading perspective.
Alright, so that's a take when it comes to Nifty 50. But moving on, then the next query, Shahina, is coming in from Sunil, writing to us about JK Tyre and Industries. 300 shares is what he's holding on to at a buy price of 165. What is your take when it comes to this one then?
JK Tires could be a decent bet if you're looking at the medium to longer term. I would believe that it could be a good bet at current levels because we've seen carbon back prices remaining stable and tires. In fact, if it's China plus one, I think most of the tire sector will do better going forward. So JK Tires could be a good bet to buy in for the longer term.
JK Tyre could be a good bet to buy for the long term. That's the take coming in from Shahina. But Kunal, the next query is a query on Sona Comstar, wherein Anil from Pune wants to have a short-term view on this particular stock. But the key to note is that the results are also due. So keeping that in mind, Kunal, how do you spot this particular stock on technicals?
See, I've looked at the charts on the medium to long term basis, and over the last 1.5 to 2 years, the stock at, I think recently it was almost at 730, 740 levels, was on the verge of a breakout. Now, in the last 4 weeks, this stock has also corrected from 750 odd levels to now 630, 40 mark for Sona Comstar, which means a broad 15% correction. So price point wise, I think it could be a very attractive territory for you to go long. As you said, if the results are out, there could be an expectation that the stock may be a bit more volatile. So in case if the results disappoint, there could be a further room of 5-7% correction for the stock. But then broadly, I think at 600, 620 mark, that could be a very good territory for you to go for a contraband Sona Comstar.
Alright, so there you go. Those are the levels that you should keep in mind when it comes to Sona Comstar. Time for a very quick breather on the show. When we come back, we'll continue taking all of your stock related queries. Viewers, don't go anywhere.
Welcome back to Buy and Sell Now show, where we get you answers for all your stock related queries. And continuing the same, the next query that I have, Shahina, is on a banking name, that is Karnataka Bank, wherein Murthy wants to know, can he go ahead and buy Karnataka Bank at current market price for a long term investment?
Yeah, Karnataka Bank is a decent bank in the private sector, but not at current levels. So I would say avoid Karnataka Bank at present. You can look at something like maybe a federal bank instead.
Alright, so that's a take coming in when it comes to Karnataka Bank. Kunal, I'm going to come to you with the next one because we do have an investor named Ramesh writing to us about IFL Finance, and 300 shares is what he's holding on to. Buy price of about 540 rupees thereabout. What is your take coming in on this counter then?
So recently the stock has corrected from 550 levels to 420. The stock is trying to fill the gap which was created, I think on the day when there was this news flow for IFL Finance, when it had fallen from 600 to I think 350 or 375 on a single day. So I think in that sense, maybe the stock is just about trying to get into a consolidation. 550 was a higher end in terms of a purchase price, for IFL Finance. I think 400, 420 seems to be a good zone where you can look to average further.
Right, that's the take on IFL Finance. But Shahina, one more banking query coming your way. We did have your take on Hindustan Bank and then Karnataka Bank, but now is the time for Kotak Mahindra Bank. And Shahina, in the latest earnings and report card, the numbers were very much disappointing, and we did see a sharp sell-off in this particular stock as well. But Akshat wants to know, at this price point, do you believe in the growth story of Karnataka, Kotak Mahindra Bank, I beg your pardon, and would you suggest a buy at this price point?
Oh, the bank has over the last 5 years not really performed, and I would believe over the next 1 to 2 quarters also, while valuations have started becoming pretty attractive in line with the other large private sector banks, I think still maybe for a quarter or two there would be some pain left. But yes, you can buy at dips, at any dip that you get. Maybe you can look at it if you're looking at it from the long term. But for the shorter term, I think the bank is likely to continue to consolidate in current levels because of the subdued performance.
Alright, so that's a take coming in on Kotak Mahindra Bank. Now, Kunal, I'm going to come to you with this next one that is coming in from Drishti, writing to us from UAE. Now, Nifty Bank might not be picking a direction at this point and might be flip-flopping between a shade of red and green. But our viewers have decided to be really bullish on those banking counters, because the next one is also coming in on a banking counter. Ujjivan Small Finance Bank is what Drishti is keeping an eye on, because she does have 2,100 shares at a buy price of about 57 rupees. What is your take when it comes to this counter then?
So the fourth straight quarter where the stock has gone through a correction from 60 rupees to now 36, 38, where it's trading right now. I think 36 approximately was the low the stock has made today. I would believe that it's a good price where you could look to start buying from a long-term play. And I'm assuming that you are a long-term investor, so I would probably suggest that closer to this 36, 38 range where the stock is trading right now, it could be a good buy.
All right, that's the take coming in on Ujjivan Small Finance Bank. The next query that I have, Kunal, let me take it from you because Vignesh wants a short-term view on Motilal Oswal, and he has bought 200 shares at a price of 900 rupees. What's the short-term view? As well as in the long term, how do you expect the stock to perform?
So short-term wise, the stock looks quite okay. It's a very balanced kind of a chart. Motilal Oswal Financial Services, where from I think the recent low of 700 or 750 in the last 1 month, the stock had climbed up to 1050 mark, and in the last 2 days, the stock has corrected from 1050 to 930 levels. So which means that there could be a bounce back again, potentially to the 970 odd levels, say the midpoint of this 70-80 point correction for Motilal Financial Services. So I think in that sense there could be a bounce back. But the only concern is that the volumes which were very strong in the last week, when we see generally these kind of strong volumes, it indicates that the stock would get into a broad consolidation. My suggestion would be to have two-pronged strategy. One is in case if the stock comes closer to 970, 980 levels, that could be a point where you may look to book profits. And then on the downside, once it retests levels of 900 or sub 900 mark, look to enter again.
Alright, Kunal, we have a big fan of you who's writing to us, Revant. He's talking about a counter. Shriram Finance is the one that he's keeping an eye on because he does have 1,100 shares at a buy price of 3,250. What is your target for this? And what kind of view do you have when it comes to Shriram Finance then?
Thank you so much for that. Now, in terms of Shriram Finance, it's one of the best quality names in the financial services stock, as well as in terms of price performance. I remember, I think, a phase where Shriram Finance was stuck into a range of 200 points, 2,400, 2,600 broadly till, start of or mid of, this year, month of May, June somewhere. And from there, we saw a very big breakout for the stock. So, which means now we could be looking at 2,600 as a strong base for the stock. My only concern is that the recent, charts indicate that there may be some, correction which may come back into the stock price on a very short-term basis. So, since you've purchased at a price which is just about fluctuating at the current levels, I would suggest that maybe look to book at higher levels of 3350 approximately if that happens for Shriram Finance. And on the downside, 3000, 3050 could be a much better level to add further.
All right, that's the take on Shriram Finance. But Kunal, I'm once again coming to you because this is a query from two of our viewers coming in on TCS particularly. Because given the move in the mid-cap IT space, is this a time for TCS to move on? Let me just quickly read the queries. Jay from Mumbai has purchased shares at a price of 4,200 rupees. Can he go ahead and add more at these levels? And even Mohit from Ludhiana is holding the shares at a price of 3,166 rupees. Wants a long-term view on this one?
So I think on both cases, I would be bullish on TCS. Now, yes, the mid-cap IT stocks are looking very attractive. They've gone through a very big breakout. We've seen persistent emphasis, etc. These stocks have done exceptionally well. So I think there would probably be coming a point where even the large-cap IT stocks would play a catch-up. Now, as of now, I would believe HCL Tech and Tech Mahindra are the strongest names so far in terms of the relative price action. Infosys is lagging behind. Wipro is also another one which is trying to play a catch-up. TCS has been an underperformer. So you can either look at buying maybe the Tech Mahindras or the HCL Techs if you're looking at the large cap IT allocation. But if you've already allotted some capital over there, then I think buying TCS at current levels of 4,000, 4,100 could also be a decent strategy.
All right, thanks for that take coming in on TCS, Kunal. Thank you so much for joining in, Shahina as well as Kunal, and patiently answering all of our stock-related queries. But with that, we're completely out of time on this edition of Buy Now, Sell Now on ET Now. Markets at noon with Somit and as well as Anisha take the action forward, so don't go anywhere.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.